All right, so this slide is a bit depressing. The reason why I say that is that these are all proposed tax law changes, and you may be looking and watching this video, and some of these have already been implemented. But it's important to understand when it comes to taxation and it comes to politics that one of the areas that I like to say, if there's smoke, there's fire. Meaning that if they're talking about it now, at some point down the road, it's going to happen. And so we broke this down from individuals to businesses, and so you can see how the top individual income rate is going to be changed from 37 back to 39.6, how taxpayers with more than $1 million of taxable income would pay ordinary income taxes, capital gains and qualified dividends. You may be watching this video, and some of these, again, may be already implemented. There's a lot of conversation about capital gains tax rates being as close to 43 to 45% now. Imposed Social Security tax on taxable income above $400,000, where the wage base right now is $142,000. You have new tax incentives that are. This is a good thing right here, really, because the government doesn't want to have to pay for you in your old age when you're unable to do certain things in a long-term care facility. So you should really have some sort of insurance in place, which this is a good thing. Changes related to contributions for retirement. They're looking to basically minimize the ability or the tax benefits of higher income people getting tax benefits of making contributions. They're looking at changing the SALT tax. And I don't necessarily think this is a bad thing either. But at the same time, they're making sure that it's adjusted based on if you're making a higher income tax or a higher income, you're not going to benefit from the tax benefits of the deductions. And so I don't necessarily know if I like that. The raise of the corporate taxes, phase out of qualified business income deduction, which came into play with the SALT tax that capped at $10,000. Revise the tax-free nature of 1031 exchanges. This is gigantic. This is a big issue, and could mean a lot of concern for people who are in real estate investing. And then impose a 15% corporate minimum tax. And really, at the end of the day, when you look at all this, there's all red up arrows. Everything's being increased except for the new incentive. But now this is going to cost you more, but those that can afford this are going to benefit from this. But then at some point they're going to remove this incentive because those that can afford this are buying it, and they're going to end up changing something down the line. But right now, at least this is the thought process. And none of this includes any of the state tax changes that they're proposing as well. So this is a big issue. And if you're not planning and preparing for these changes, and guess what? These changes are going to always happen. If you read my book, Economic Termites, one of the major termites is laws and regulations. When political environment makes changes to laws and regulations, that's going to affect you. It's going to eat away at your wealth and your hard work. And you need to be aware of it now.